what a week in the stock market. We have a lot happened this week in the stock market. A lot happened this week in the stock market. So before I get into that, I'm going to be doing an overview of this portfolio just in 1 second. I'm going to be talking about all these different sections of the portfolio. I'm going to touch on the S&P 500, how the S&P has done in the past week. As you can see, it's been quite a roller coaster for the past week. The U.S. unemployment. I'm going to be talking about the U.S. unemployment. This was around all the shelter in place that we've had. You see, as you can see, it was a bit steady. It was a bit steady, and then once we started getting all the shelter in place, it just shot up. Thank God it's tapering down. At a point we were up by 6 million. 6 million Americans were out of a job. 6 million, right? The other thing I'm going to also get into is this man right here, Jerome Powell. Apart from the president of the United States, I think the one of the other most powerful person that most people do not know about is this man right here, Jerome Powell. Jerome Powell is the chair of the Federal Reserve. The Federal Reserve is the central bank of the United States, and arguably this man wields a lot of power. I'm also going to be touching on what has been going on with the Fed's balance sheet. As you can see, this is the all-time right here. You see how it shot up. I'll be touching up on this. I'm going to be touching up on some of the key points from his last news briefing, the last FOMC meetings. I'm going to be touching up on that, and I'm also going to be talking about Elon Musk. We all know Elon Musk, extremely controversial. Personally, I'm a big fan of Elon Musk. I love all the things that he's been doing. He's arguably one of these genius that we have around right now, and I'm going to touch on his story. He basically dropped an F-bomb on the Tesla conference call, and I think I support him. I support what he's doing. I support some of the points that he laid out, and some things too. I disagree with some things, but I'm gonna be pointing out all those things in this video. Before we get into that, let's get into this portfolio. This is my favorite setup right now, and I'm doing some few things. I'm moving money from my other brokerage, which was Stash. I'm moving it into M1, and gonna be moving things around. I'm really working on this portfolio, trying to get it as perfect as possible, and I'm gonna be going over this right now. So if we look at the activity feed, let's go to 1 week right here. If you look at this section right here, I deposited basically $146 got invested into the portfolio. If I go to the activity feed right here, as you can see, all over throughout the week, and I go to trading only, and you can see what has been going on. This is the total amount of money that went into the market. They bought all these different companies. So when you put money into M1, it reinvests the money into all these different companies based on your allocation and what's underweight and overweight. I do have a series that I'm gonna be releasing every Wednesdays, going into the educational part of things that you need to know. So what's overweight, what's underweight, what's an asset, what's a liability, all those things. I'm gonna be dropping the videos on them. I'm gonna be dropping a video every Wednesday explaining those. But for the sake of this series, which is every Saturday, every weekend, I'm gonna be talking about how my M1 portfolio is working in general. So for the week, I bought a total of 15 different companies, and I spent $47.62 on that. And these are all the companies that I bought. We all know them: Visa, Vanguard, Nike, United Health, Costco. And as you can see, these are the amount that I bought. And yeah, and all this to me right here, right? I see it as seeds, planting seeds, right? In the next 3 months, they're all gonna be earning me some sort of money. They're gonna be earning me some sort of money. It might not be much, but they're gonna be earning me money. So you put when you buy a stock today, don't expect to really get paid from that particular one that you buy today until after like 3 months. So as you can see, these are some of the transactions that I've had for the past like since February, I guess, this year. Okay, actually, you know what, let me talk about this. So earlier on the year, I was putting in like $10, $10, and I'm taking this portfolio seriously now. I've really cleaned up the house, basically. Let me escape from here. I've really cleaned up the house, basically. I got rid of all my liabilities, and I'm gonna be putting in at least an average of basically $10 a day, right? So this is what I was doing in a week before. I'm gonna be doing it every single day, and I'm looking to grow the amount of money that I put into this portfolio every single week. Every single week, I want to be increasing the amount of money that I put into this portfolio. So let's look how much I've earned throughout last week in this portfolio. So now, how much I've earned. Let me see if I can put a. I'm not gonna get into that right now. It will take a little bit too long for this video. As you can see, let's start from as you can see right here actually, 3 cents, 4 cents. You think all this money is little money, or you're not really earning much, but what matters is when all this stuff adds up, when all this amount and little amount of money that you're getting paid from all these different companies. And as you can see, some of them, Verizon, AT&T, Toronto, TD. Basically, this is like TD Bank, LTC Property, JP Morgan, Costco, UBA. These are companies that we all know and we all buy their stuff. These are ETFs. These are companies that we know and buy their stuff. And the whole point of me doing this YouTube series is to show you that it's very important to also invest in companies that you know. Like, I'm a Verizon customer. I have their phone line. I pay them every month. I might as well buy their stock so they can pay me as well. So these are some of the things that you can that this portfolio do, the M1 Finance portfolio do for you seamlessly in the background. You don't even have to work. All the work that you need to do is put money into the portfolio and just let it do its thing over time, right? So all this right here, all this money that comes in gets pulled together, and this is how we get, if we go on the month view, this is how we get this number right here, right? As you can see, as it's coming in, right? As it's coming in, it comes in very little, but they all add up. This is completely passive income. I don't care if it's 1 cent, 2 cents, as long as someone is willing to pay me money, and I just invest my money with them. I'm an owner, part owner of the company. I'm happy. The goal is to grow this over time. Grow this to $1, $2, $3, 10, 20, 100 every single time. That's the single biggest goal with that. Let's see cash management. That was a referral. Okay, trading. I already touched on that. Dividend, I already touched on it. So let's go into portfolio. So the week view, I've gotten paid this much. So the past 5 days I got paid 62 cents, and the past month I got paid $2.39. Mind you, this is all I have in there. I have $1,130 in there. If you have this money sitting in a bank account, you're not gonna earn this kind of money from that, right? So it's very important to put money to work as much as possible. Now, if I get into this particular portfolio, this particular section of the portfolio, which is the passive income side, this generates most of the income for now, based on the fact that 84% of the money that comes in primarily go into this, and this is primarily geared towards companies that are paying dividend, right? I have different sectors of the economy that I've invested in. I have the real estate sector, I have the bond sector, which is like different government bonds and corporate bonds and all those things. I will be talking about all this stuff in details in my educational section that I'm gonna be dropping every Wednesday. So like and subscribe, stick around. I'm going to bring value to you. I'm going to bring a lot of financial value to you. And yeah, so utilities, I have 10% of the money going in there. Consumer 15%. Healthcare, finance, tech, I have like all the major big sectors covered. If I go into tech, for example, right, go into tech, as you can see, $64 is the current value of tech. I ran a total of 2 cents from this sector. And you can see I have Apple, Microsoft, Visa, Cisco. Like, these are all different companies that we know, and by owning them, you become an owner of the company, and you basically get paid passively from the profits that the company makes, right? So that's what I've done with those. This is let me check this section. This is Warren Buffett's company. This is basically some of the companies that he owns. I'm a big fan of Warren Buffett, so I'm investing in some of the companies that he owns as well. And like I said, M1 have this thing down packed. M1 got you. So this is a great platform. That's why I'm actually out here doing videos and showing you how I'm using this to benefit me, because I see the potential in this. And I'm literally just starting from the ground. This is like the ground up. This is from the beginning. I started with $100 and I'm putting in money. And I will still be doing this when this portfolio gets to like $100,000. When it gets to $500,000, I'm still going to be doing this. All I care about is I want to be able to log in here every single month, click right here, and see this go up all the way until it gets to 100,000. When it gets to 100,000, I'm going to leave it to do its thing by itself, right? That's the goal of this portfolio. So stick around, subscribe. I'm going to be bringing in value. I'm going to be bringing value to you for a long time to come. So this section here is global value, and it's just an ETFs. Like I said, ETFs is a basket of stocks that or bonds that focus in one sector. So as you can read this, pause the video, read this, you know what this ETFs is about. So this is how I've split those up. And this ETF focus on global value. So globally, which companies are basically valuable and bringing value to the whole world. And yeah, these are the companies that I have in that. Then I have global growth. So global growth are obviously companies that are collectively working together to grow the world's economy, and these are all the ETFs that I have for that as well. The reason why I'm even using ETFs is just it's just better. It saves you the hassle of going out and actually buying all the individual companies that all this company has. So ETF do have a really significant place in anybody's portfolio, and using the mix of individual stocks like this one and ETFs is actually great. Let's look at the ultra aggressive section. As you can see, these are all Vanguard index fund. This is the S&P 500 index fund. For anybody that's starting, that is brand new to investing, if you're just starting from day one, you don't know anything, you're just starting from day one, you don't know how to pick companies, you don't know about stocks, you don't know about anything, and you're just starting, this is the only thing that you should look into. Now, this is not financial advice. Do your own research. I'm just sharing my journey. This is for educational purposes. I'm just sharing my journey with you so you can go out there and do your own research. But if I would start brand new, I would buy this one right here. This is VOO. It's called VOO, as you can see, and it tracks the S&P 500. The S&P 500 is the top 500 companies in the US. Top 500 companies in the US combined into one. So instead of going out and picking all the top 500s, you can just pick this one portfolio, which is the S&P 500, and just put your money in consistently over time. This pays a dividend as well. It pays a dividend of a dividend yield of 2%. The expense ratio is really low. So the expense ratio means that how much is it costing you to be a part of this fund, right? Because it's a fund. And the total asset of the company is over $132 billion. So you know your money is pretty safe. But if you're brand new to investing, start with S&P 500 index fund. Don't pick a company yourself because you don't know how to pick a company, or you don't have. If you have the right education and you know how to pick a company, great, that's good for you. But if you don't, I highly recommend you just stick with the S&P 500 and you just constantly put money in over time. You know, whatever you can afford. If you can afford $10, if you can afford $20, if you can afford $500, you just put it into this one VOO. Just put it in and just watch your money grow over time, right? That's the best way to do it. So let me look at holdings right here. So these are all the if I just look at the going into holdings right here, here's a list of all the 92. I have 92 positions, and I'm moving some money from my other brokerage account right in here. So in the next couple of videos, you'll see this number jump up a little bit, maybe to like 2,000 or 2,500. And I'm going to be aggressively putting money into the market. I'm not going to be dumping all my entire life savings into the market all at once. My goal is to dollar cost average. So slowly put money into the market over time. So if it's $200 a week, if it's $100 a week, my goal is to treat this as a bill that I have to pay. First of all, I've cleared out all my other bills. I don't have a car payment. I don't have credit cards. I don't have any of those things. I got rid of those evils. Those stuff are evil. Evil. Get rid of them. Once you get rid of them, you can start dumping a lot of money into something like this. And over time, my goal is to be putting in $3,000, $4,000, $5,000 into this portfolio. And yeah, these are all the companies that I own. You all know most of them. Apple, you probably know Apple, Verizon, Bank of America. This is Duke Energy company from the South, Visa, Coca-Cola, JP Morgan. You can just read it yourself. You see, these are just companies that we all know. We buy their stuff. This is 3M. They make a lot of stuff. They're making the mask that we all using right now. They're making they make medicine. They make all this stuff. So that's that. This is the S&P 500 VOO. This one that I'm talking about. If you don't know how to pick companies, you don't know anything about picking stocks and stuff like that, I would recommend that you just start with this VOO. Don't pick any companies. Don't pick any company yourself. Just start with this. Consistently put money in, and as you learn about as you stick around and you watch some of my videos that my educational videos that I'm gonna be dropping on Wednesdays, you will see what I'm talking about here. And yeah, you see TD Bank, Waste Management. These are all different companies that we all know. Delta, that we all know, and we buy buy their stuff. United, we buy stuff from them. So you have to invest in companies that you buy their stuff. You just don't want to be a consumer. You also want to be an investor. You want to be the person that just consume. You want to be the person that actually invest as well, right? And that's what I'm trying to do here. So far, I have a total of 92 holdings. This is going to be going up pretty significantly the next couple of videos that I do, because like I said, I'm in the process of moving some money over from a different brokerage. So this will be going up eventually. So if you pop over to the funding history section here, this is a great chart. This is a great chart because this will show over time how much money I've put in, and as you can see, over time this will go up, and this will keep on going down. In total, in 2019, I put a total of $800, and so far in 2020, I put a total of $482. Now, my goal, like I said, is to aggressively put money into this over time. So right now, I'm putting in like $160 or so a week. The goal is to bump that up all the way to maybe $1,000, $2,000, $3,000, $4,000 a week as I go along, because compounding, I need to really put in a lot of money for me to get to my one goal that I have for this portfolio. Hopefully you've enjoyed that section. This is the section where I talk about the portfolio, the amount of activities that have happened. You see all throughout the week, all the dividend that came in, all the stocks that I bought in the past week. And then if I go to holdings here, which I just showed you, you see a total of 92 positions. The cost basis means the total amount of money that I paid. The current market value means the total amount of money that it's worth, and it's currently down right now, but this don't bother me at all. Even if it goes down 50, 60, 40%, it still don't bother me, as long as these companies are all still existing. They all still, Verizon is not going anywhere anytime soon. Bank of America is not going anywhere anytime soon. Coca-Cola has been here for 100 years. I mean, all these companies are not going anywhere, so this don't bother me as much. And then the other section that we also touched on right now is just the funding history section. You can see the total that I put in 2019. I really wasn't taking it serious, but this year I'm taking this serious, and I'm excited to share this with you and to show you how this grows over time. The S&P 500 has had a huge roller coaster ride. As you can see, it went up 2%, came back down almost 2%, went up again almost 3%, then gave all that stuff back up again, all the way back down to 4%. So you can see we've had a huge roller coaster ride here. So if you switch over to the chart, you see this is the past 5 days. This is where us as a trader, this is where being a trader comes in, right? Because you don't necessarily just have to only do one thing. I know some people, they absolutely hate day trading. But no, I personally think there's room and space in both. And if you stick around long enough, you're gonna see what I'm talking about. There's room. You see how the market has gone all the way up, came back down, stayed at a double bottom here, went back up, came back down. So all this gives us, like right here, gives us as a trader, right, gives us an opportunity to make money in the market, right? Because right here is an opportunity to make money. Right here is an opportunity to make money. Right here is an opportunity to make money. So if you buy calls here, it goes up, you sell it, and you make money on this move up. Sorry about this. If you buy calls there, you make money on this move up. You make money on this move down. You can make money on this move up. This is a good move. This is a good move here. Nobody could predict this. I don't really play any trades overnight. I don't really play any trade overnight, but you could have because if you look right here, this was a double top right here. Double top meaning the stock price could not break any higher, so most likely it's probably going to keep on going down. But I usually don't like to swing trade right now. I'm not really swing trading or anything like that. I just primarily day trade and just work my other job until you know I can get enough money to really focus on day trading. But yeah, so right now I'm doing it part-time. I'm doing trading part-time. I'm doing YouTube part-time, and I'm working on my job, and I'm just hopefully gonna quit my job within the next 6 months and do this YouTube full-time and day trading full-time as well. I like the combination of both day trading and YouTube. And talking about my dividend investing, I personally think that there's room for both. There's room for both. You don't have to choose between one or the other. There's room for both, and I'm doing this YouTube channel is simply all about that. There you go again. This is another move right here. So if you can place a short here, betting that the market would go down, and it did. I've done tons of videos about this. I'm going to be doing more as well, technical analysis videos. So yeah, this is S&P, and the S&P has basically been on a roller coaster. If we pop over to the VIX, right, the VIX is the opposite of the S&P. So when S&P goes down, as you can see right here, it hit a double top right here, and it basically went straight down. The inverse of that is the VIX. Right here, it hit a bottom. It hit a bottom, and it went up. So like I said, as S&P goes down, the inverse is VIX, and VIX will go up. So as VIX goes down, S&P will go up, and as S&P goes down, the VIX will go up. So that is that. We can see that we saw an up right here, an up of 2%, a down of almost 2%, another up of almost 3%, and also a down of 4%. So the S&P 500 has been on a roller coaster ride all week. The other big news of the week has been the unemployment rate. The unemployment rate is steadily going up, and we understand why. We have this virus around, and everybody's losing their job. People are scared to go out, and it's understandable. And if this has impacted you in any way, I'm sorry. I'm sorry for your loss. I'm sorry for everything that you're going through. I'm going through it as well. Luckily, I'm okay. I haven't lost anybody in the family. Everything is good. So I'm thankful. I thank God. But sorry if you lose anybody, or you know someone that have lost someone. Sorry about that. But we can look at this right here. The highest that we've gotten to is almost 6 million. 6 million Americans are out of work. 6 million. And this is in the space of 1, 2, 3, 4, 5 weeks, the top of 6 million people. I mean, the United States population is probably like over 300 million. So 6 million people out of work is a lot of people. A lot of people that are not getting paid right now, that are out of work. So the good thing about this is it's trending downwards, right? It's trending downwards. Hopefully, we're gonna be seeing a steady downwards trend on this. Now, the man of the week. The Federal Reserve is the central bank of the United States, and Chairman Powell is the head of the Federal Reserve, and he makes all the decision on the U.S. monetary policy. I mean, the board of governors, the sixth board of governors, but he's the He's the head honcho. He's the one in charge. He's the one that decides how much money we print. Is the money printer? Is the main money printer person? He decides how much money we print, how much money goes into circulation, U.S. monetary policy. I'm going to be doing an educational series, like I've been saying, every Wednesday. Please subscribe and stick around. You're going to get a lot of value from this. He's in charge of the Federal Reserve, like I said, and he's been talking about a lot of things, and I'm going to show you some few videos in a second. So before we get into that, let's look at the Federal Reserve. This is their balance sheet, right? And balance sheet simply means how much money you've. You know what? I don't want to butcher this. I'm gonna leave a description right on the screen right now. So the Federal Reserve's balance sheet before the pandemic was actually going down. It was on a downward trajectory. It was actually going down. But as you can see, after we had this pandemic, we had this issue, the balance sheet basically started going upwards. And one of the reasons why this is going upwards is because the Federal Reserve is doing all they can to support the market, to support the U.S. economy. Basically, when the Treasury Secretary, which is Steve Mnuchin, this guy right here, he's the Treasury Secretary of the U.S. He's in charge of the U.S. bank account. The IRS is under this guy. The IRS is under Steve Mnuchin. He's in charge of the U.S. Treasury Department. And the U.S. Treasury Department issue bonds, right? Bond is simply an IOU, and the Federal Reserve buys the bond. So the Federal Reserve have the power to print money, right? The Federal Reserve print money. They have the power to print it. And the U.S. Treasury has the power to issue Treasury on behalf of the United States, right? So they issue Treasury, so they raise debt, and the Federal Reserve buys the debt from the government. So Federal Reserve, they just print the money, give the money to the U.S. government, which is, he's part of the U.S. government. Steve Mnuchin is U.S. Treasury Secretary. He just writes a piece of paper, which is IOU. Basically, an IOU is a bond, is government security, IOU, and the U.S. Federal Reserve buys the bond and give the money to the government. So the way it works, like I said, the Fed prints the money, the U.S. government takes the money, and the Fed expect that the U.S. government will pay them back the money that it printed. So you can see how powerful the Fed is. So if you look at this, as you can see, the balance sheet has shot up big time here. If we go in 1 year, we were basically slowly inching up. But as you can see, in January, we were tapering off a little bit, and then once all the shelter in place started going in, and the stock market started going down, on the S&P started going down, the Fed's balance sheet started going up because they started buying everything, treasury bonds. They started buying all these different corporate bonds, and they also opening up different facilities, which I'm going to get into in a minute. But their balance sheet is going up, and it looks like it's going up. They are thinking about taking it to maybe another like $7 to $8 trillion on the Federal Reserve balance sheet. So that's something to watch out for.